Okay, so I see people joining. That's great. So again, welcome everyone. This is a webinar where we'll focus about updates regarding the Portuguese state budget and how they affect businesses in Portugal. We'll cover different topics, a lot of them related to taxation and how some tax treatment on a couple of different things. This webinar will last for about 1 hour. 30 minutes or so for the presentation, and we have a couple of key information points to share with the audience, but we'll have time for Q&A at the very end. I do invite you to write questions as they might pop up. Using on the right, you should see a little icon with a question mark on it. Please do open that section and leave the questions there. Otherwise, feel free also to chat on the chat options available on this platform. My name is Pedro. I'm the founder and CEO at Bridgin, and thank you so much for joining today. I'll just give you everyone like 10 more seconds and then we'll get started. So let's start this webinar. Again, Portugal state budget, and we'll be focusing on the updates for 2026. All right, so the topics that we will be covering today are all of this. So some detail on some economic indicators that do affect a few things like salaries and social contributions. We'll focusing on some bonuses regarding productivity, also changes more on the individual level, but also potentially relevant in terms of the personal income tax. Then again on updates regarding personal income tax regarding the tax brackets. Then on some incentives regarding increasing of salaries and benefits that were created. Again, also slight changes on the telecommute or telework compensation, the meal allowance, which I would assume some of you will know, but always important to reinforce that as we do have always an international audience here. Then a very interesting update, particularly if you are running your business, which is the corporate tax that has been decreasing and continues to do so. Some important information about fiscal obligations and things that sometimes get a little bit postponed, the obligation of complying with them. Information about some data interconnection that is also relevant. We'll have a quick note as well in key facts from Azores and Madeira. And a summary on some action items that you should consider if you do have a business in Portugal or are looking to have. So without further ado, let's start with the first one. So some key information that you should take into consideration, because more and more they do have some effect on how you run the business, which is in this case the inflation forecast for 2026. We do know that we live in a strange time, again, with the conflict now in the Middle East. So this might be greatly outdated soon. But what was on the state budget mentioned a 2.1% inflation forecast. The other thing that, and this I guess won't change, was the minimum wage for the year of 920 euros per month. This is gross amount, and this means obviously that for you to pay for a full-time worker in Portugal, you need to provide at least this as base salary. There's another index that potentially some of you have heard, the IAS, which is basically an index for social support, and there's a lot of things that are connected with this. Some social contributions, unemployment benefits, also some programs with some subsidies from the government. So it is also a number to keep in mind. Usually it is applied a multiplier with this base value, depending on the programs that they refer to. But all of these values were updated in the state budget for 2026. So here you have them so that you know them whenever relevant. Now, Something that is, I guess, fairly recent. There was some of this in the previous budgets, but this is not something that has been existing for a lot of years, which is the productivity bonus. So the idea that the government not only has been raising minimum wage, but also wants to try to increase the average wage. And one of the ways to promote that is by creating financial incentives so that the companies do so. And in this particular case, there is some exemption if you do increase the salary, or in this case, if you do pay bonuses. It is limited, the exemption, but if you do provide a bonus that is up to 6% of the employee annual base salary, that will have some important exemptions. Do note, and this is actually common for any bonus, that for you to qualify for some exemptions, notably Social Security, because that's really the exemption we're talking here. We are not talking about personal income tax, but for keeping that, you do need to. They must be paid voluntarily and non-regularly. Do keep this in mind. For instance, this applies regarding Social Security in other bonuses as well. If an employee has a recurrent bonus, imagine a sales bonus or something like that, it is subject to Social Security. There are, however, cases where if they are frequent, they might be exempt. Obviously, I always advise that you talk with an expert in taxation. Obviously, this is what we do at Regine, but there are other providers in the market that can you advise regarding the specificities. This can be quite relevant because, as you know, the employee side of the Social Security contribution will be, it is 23.75%, plus the employee also pays 11%. So combined is almost 35%. That if it can be exempted, it is obviously a lot more net compensation that goes to the worker. Now, the other thing specifically around the 6% exemption on productivity bonus does require that you also increase salary, in this case, specifically 4.6%. So the key idea here is that instead of that companies don't use bonuses instead of raising salary. So the government does provide incentives to pay bonuses, but he also wants that you raise salaries on the base level. So this is why it is some conditions here, or double conditions, is really to try to forecast and promote that behavior. Then there's obviously an obligation that this bonuses is on the annual income declaration, but that's typical from your payroll provider to include. So have this in mind if you are wanting to increase your workers this year. Know that you might also be able to have some exemption in terms of taxation regarding the bonus that it is paid to them. Next one, more on a personal level. So again, for you to have the framework here, maybe for some audience members that might not be local, in Portugal at the personal level, you can have deductions to your personal income tax. There's even a whole portal where you can add and classify these expenses. We must have obviously an invoice with your personal VAT number. And the government has been adding more categories that include bigger deductions, essentially, to the final tax that you need to pay. In this case, areas around cultural and educational and social relevant sectors have been added. And the other goal of this is that the government tries to fight parallel economy, meaning goods and services that you pay for which you ask no invoice, and then arguably the provider might not communicate that to the government and hence does not pay tax. Obviously, governments want to collect tax and they do want to make sure that people have that track record. In this case, one way to incentivize that is to enable some deductions at the individual level of the worker. So yeah, that's essentially it. It's not particularly new, but this is continuing to be growing in the amount of categories included. Now, what we have here is an update on the income tax, essentially personal income tax. Now, do note that this is the table that applies at the end of the year. This is not the monthly withholding tax, this is a very complex topic. A lot of folks, and you will probably know that in Portugal, we are not known by having a very high financial literacy, unfortunately. This is really the table that matters, because whatever you are, if you're a worker or if you're an employer, whatever you are withholding from personal income tax, it is simply a tax advance, right? What really matters is the final tax bracket that you fall in at the end of the year. And this is exactly that table, what applies at the end of the year. So obviously, a lot of factors influentiate this. Notably, it is not only salary. You might have other sources of income, like pensions, for instance, and there's other sources of income that you might decide to put them under your end of the return. And so, the value can change a little bit for, most people that don't have other sources of income. It will be obviously the salary. Now, the way that you should look at this and is you look on the left, you look what is the bracket that your income range sits on, and you can then go to the third column, average rate, and kind of calculate how much of that you will be paying in income tax. Do note that this is before deductions, so the previous slide, also important here. And there's also an additional part that is deducted from this amount. But, it's a good enough proxy for you to have an idea on how much tax without deductions would apply on the income generated on a given year. The update for this year, the brackets changed slightly, and there was an update of 3.5%, meaning they increases the brackets, assuming that people on average will receive more, right? So they will not pay more tax, right? They will stay under the same brackets, more or less under the same percentage. Obviously, as you see here, personal income tax in Portugal is progressive. So higher salaries, higher rates applies. All right, moving on to the next one. So this is the other side of the previous that I mentioned about bonuses. This is actually the increase in salary. So again, that limit of 4.6%. If you do increase that on average on your employee base, you can actually have, as a company, also extra deduction in terms of calculating the company corporate tax. So this is one way for the government to incentivize that companies do increase salaries of their workers, because they will have, obviously, cost with salaries are obviously deducted from your P&L. You don't pay tax on it, but it does have a 200% deduction, meaning that it can double, right? So you have a bit of a benefit. Instead of paying tax, you can shift some of that money to actually salary increases. Now, there's our conditions, as unfortunately always are, but you do need to know that the average must be 4.6%, right, or above. But anyone that is below company average needs to be at 4.6% or above. Meaning, maybe a high earner does not need to get this increase, but anyone that is below average absolutely needs to. So, devil sometimes is in the details. So please, get advice and make sure that you understand this so that you can benefit from these deductions. The third very important category here as well, is that this applies exclusively to employees with a permanent work contract. So not a term contract, not an uncertain term contract, only permanent, or called open-ended contract. This is obviously, again, because the government wants to make this the default employment agreements that companies use. Arguably, this is not the subject for today's discussion, but arguably these contracts do have some very important considerations regarding how you can potentially terminate them, because the idea is that they are permanent, right? But to get this incentive, this deduction, you would need to only apply it to those permanent contracts that you have with employees. So keep that in mind as well. This moves a little bit beyond taxation and actually also get some legal advice to fully understand the conditions that the different work contracts might have. Moving on to the next one, which is this is obviously something that emerged after, well, the pandemic, right? When a lot of people were working from home. It has been suffering slightly adjustments every year, more or less. And the idea here is that if you have a worker that is working from home, some personal expenses by working from home can be deducted, and more importantly, can be deductible as business costs. So it's not money that will not be, recognized, or it doesn't deduct from the corporate tax to pay on later at the end of the year. Now, this typically falls, as you can see here on the middle, three things: internet, electricity, and then the use of personal computer. And there is actually a daily limit for each. So you can pay a worker that is working from home up to 10 cents per day when they are working from home, up to 40 cents per day if they're using their personal internet, and 50 cents if they're using their personal IT computer or equipment. Now, this these limits can be increased. Generally, anything that is from a collective bargaining agreement can have slightly different changes, but they are increased by 50%, and that's recognized on the tax code for 2026. It is also so also important to say that this is not taxable income for the employee if done in this way. But being a little bit more pragmatic, this does have potentially some challenges in application, depending on what is your setup regarding, fully remote, maybe hybrid. If the hybrid is set, is a rule like 3 days in the office, 2 days at home, or if it's more flexible. Why is that? So these daily limits only apply when the worker is working from home. So if you have a hybrid regime where the worker works 3 days out of the office and 2 days from home, this daily limit will only be able to be paid and not taxable on the 2 days that the employee is working from home, not on the full 5 days of the week, only on the 2 days. And just rounding it up for 4 weeks in a month, it would mean only 8 days in the month. So keep that in mind. The other thing here is, I'm assuming some companies might offer a laptop and the worker might work out of, if obviously is in some sort of knowledge worker job function, they might work with a computer, maybe a company issued computer, a laptop that they work at the office and they bring on home when they are working from home. If that's the case, the 50 cents here are not eligible to be paid, because they are only if the worker is using their personal equipment to do the work. Now, this can get a little bit confusing. Imagine, for instance, that the worker has, an external monitor that he might have purchased. Will this qualify or not? So what I'm trying to say is, again, you need to fully understand this, have a plan, have good advice so that you can maximize this. In practical terms, what we sometimes find when we have and we support companies ourselves that have a very flexible working arrangement is that keeping track of when the employee is working from home and from the office or some other place can be very hard. And so, the cost of calculating all of this does not justify the benefit. Uh, Keep in mind that we are talking about maximum €1 per day. Assuming that the company issue a laptop, we are talking about maximum 50 cents per day, which multiplied by 20 will be €10, right? Out of those €10, we are talking about €10 that are exempt from taxation. But taxation is not 100% Latin, right? So we are talking what? Potentially, depending obviously on the rest of the salary, but let's say that Social Security and personal income tax, they amount to 25%. So essentially, you could be saving €2.5 by applying this successfully, right? Is it worth it, the time, the cost of keeping track of when people are in the office or remote or not? Well, really depends on your individual situation, how flexible it is. It is pretty easy if people are working from home every single day. It can be a little bit hard to manage if they are very hybrid and flexible. Meal allowance, this is a little bit simpler. So in Portugal, anyone that works in Portugal will probably have received this. We do have a meal allowance that is fully exempt from taxation with limits, but it is a great way to provide all the costs for the company is net transferred to the employee. There's two lines here. Why? Because depending on the way that this amount is paid, they can have different limits for the tax exemption. So if you pay together with the salary as a transfer for the bank of your employee, the limit is only 6.15 euros per worked day. Note that, worked day. Okay, vacation, sick leave does not they are not working, so they don't get paid the meal allowance. However, if you do pay them through a voucher or a meal card, the limit that is tax exempt is 10.46, which is significantly more. So it is always a great way to maximize net compensation to their employees by using this meal card voucher. What is this and how do you get it? Well, essentially, there's plenty of platforms. We at Regine also use some of them. And the main goal is that this money gets put in a sort of a wallet, usually associated with a card. In that card, it is limited to pay for essentially food, either in restaurants for meals or at the supermarket buying for food. So fairly easy to spend that money. After all, we all need to eat, but the higher limit does come with that limitation. The amount that is transferred for the bank, like in the payslip with the transfer, obviously there's no control in how people spend it. You can spend it in whatever, but we all need to eat, and through the meal card, you can have a higher net amount that is also exempt from taxation. Next one, we have the corporate tax update. So this is in line with what we've been having on the previous years. Well, at least the lowering ERC table, but there's other things here as well. So let me start actually with the plug-in hybrid vehicles. So if your company is needs, an automobile, a car to perform their mission, we still have exemption from a lot of taxes for 100% electric vehicles, but there was an update regarding plug-in hybrid vehicles. And so there's some additional tax, the so-called autonomous tax. You can see here that it can be 2.5, 7.5, or 15%, depending on the vehicle purchase price. So the idea here is that cheaper vehicles have a lower tax, more expensive vehicles have a higher. Why is that? Trying to essentially prevent that cars, more luxury cars, sometimes maybe for managers to use, not necessarily to do the work, have a higher tax associated with them. But there is a clarification regarding who is exempt from that. And now there is this Euro 6E emission standard. So they need to emit up to a certain amount of CO2 per kilometer. And this was because of some fake results, as always happened regarding the emissions. So now there's essentially a new certificate, and for you to be able to have these reduced rates, they need to comply with this emissions standard. The other thing that has been happening, I believe, for a couple of years now, essentially since the pandemic, or obviously the impacts on the economy after that, which is traditionally in the law, if a company has a loss in a given financial year, there is an extra subcharge that actually, particularly the autonomous tax and others, you need to pay more. So the government is, yes, penalizing you for having a loss. It might seem counterintuitive, but the idea here is that sometimes, particularly smaller companies, even so-called unipessoais, so company only with one owner, there's a lot of mix between individual and corporate expenses. Okay, so maybe you put a lot of expenses that arguably might not be necessarily for the business into the business, and if you, I guess, overdo it so that the company actually ends the year with a loss, pay more tax. So I guess this is one way to try to make sure people are not, over putting expenses that should not be there on the company. Now, the novelty here is that this is actually not applicable to 2026. And so if you feel any of these conditions, that is, you had at least one profitable taxable year in the last 3 years, so it will be 2023, 4, 24, or 25, and you obviously made your tax filings on time, so please make sure you do it. And the company is on a startup phase, on the initial years of activity, you can have access to this specific. So even if you have a loss, you don't pay an extra tax for it. Now, something that is quite interesting and shows definitely a different stance is the lowering of the corporate income tax. So this started last year, but it has been continuing following the path that was laid out last year. So we had a 21% corporate income tax for big majority of the last years, last decade. But last year it was brought down to 20%, and as of 2026, it further reduced to 19%. The goal is that this continues to be decreased until it reaches 17% in 2028. What this means, obviously, less corporate tax, so more money that remains in the companies, which I guess for anyone running a business, they will be quite happy to hear that. Furthermore, for the first 50K of taxable profit, and specifically for small and medium-sized companies or small mid caps, the first 50K of taxable profit has an even reduced rate of only 15%. This is quite relevant because often we hear that Portugal is not, very tax friendly. There's other countries out there that are a lot more, friendly regarding that. But there was a discussion not too long ago to try to bring up the minimum tax at the European level to 15%. And the interesting thing here is that in Portugal, we are already at that 15% for small companies and for the first 50K of taxable profit. And this covers actually a lot of businesses because in Portugal, we do have a lot of small and medium-sized enterprises. So effectively, for a lot of companies, they will only pay 15% tax on their profit, which makes Portugal very competitive from a corporate tax perspective. Moving on, and we are almost getting here to the end, so keep those questions coming, please, so that we get to those in a few minutes. Some fiscal obligations were delayed. Well, I should say that this happens often, either because it is hard for companies to adapt, or even the government has a hard time adapting. So one of the things that got a little bit postponed was some obligations regarding accounting and a specific file called SAFT file that is, to communicate invoices that were issued and received with the tax authorities. So that is now to be applicable for 2027 onwards. I guess not. Well, you should try to use good software and make sure you do this, but it has been delayed. The other thing is long topic, which is the acceptance of PDF invoices. So also during the pandemic, because of obviously the sanitary reasons, the tax authorities accepted invoices in electronic form. Not only the invoices that are issued in electronic form, but also scans of physical invoices. That continues to be extended every year, and it was extended again until the end of 2026. And same thing regarding in public procurement, also some exemptions regarding SMEs and electronic invoicing. So overall, good news here. I guess a little bit more time for businesses to adapt to new regulations and the ability to keep things digital and not needing to, keep up the paper well, you should keep up the paper invoices, but at least you can submit them in the digital form. The next thing that is quite important to know is that government and the different institutions are communicating more and more between themselves, right? So there's more data interconnectivity between justice, finance, and social security. Hopefully, this will also mean that we don't need to report the same information to all of them, but it does mean for you that you need to be clearly and compliantly reporting for these entities. You cannot have employees don't pay social security on them or forget to withhold their income tax, because more and more the tax authorities and the government authorities will find that easily. So be aware of this. Obviously, you should not do that, but be aware that that interconnectivity will make it much more easier for them to figure that out quicker, like unpaid benefits or contribution fraud or whatever might be, and even access to bank accounts, right? So now Social Security can ask access to bank accounts so that they understand what is going on regarding some payment. So uh, please make sure that you keep your obligations in timely, that you pay them on the right time, and that you don't let anything miss, because the probability of being flagged quicker is now more relevant than never. So a quick glance now at Azores and Madeira. As you might know, they are islands, and they do, well, archipelagos, I guess. And they have, because of their peripheral to Portugal and to the European Union, they have the ability to have a more interesting taxation. So in Azores, the corporate tax is even lower. So we were talking about how 15% can be quite competitive, but there's actually this possibility then if you are based in Azores, you can have a lower tax as much as 8.75%. In Madeira, there's a little bit more rules, but the general tax is now 13.3 percent. Actually, for SMEs, 10.5%, and even if you're micro, so very small, again similar to Azores, only 7.75%. Do note that also the income tax on individuals is lower, so the top marginal IRS rate is lower in Madeira. But, and here comes the other side of this, if you choose to start a business in Azores or Madeira, you do need to start a business in Azores in Madeira, meaning it does not serve only having a headquarter there, but have no one working there. It is very important that you have presence, that you actually conduct business over there. Okay, or else they might strip you out of these benefits because you're just doing tax planning and you actually don't conduct any business in the island. Okay, so be very careful about that, because there were cases in the news that are being disputed in court right now because of incorrectly given tax breaks like this for companies that have no substance in the islands. So, as a summary, getting quickly here to the end of the presentation, and we'll start with questions. Keep them coming, please. So you should totally look at your salary and planning, if you are able to do so, with a 4.6% increase. Note the exceptions that we mentioned earlier. You can have a deduction on the corporate income tax. Note the possibilities regarding the telework policy, that you can have not only deduction on those benefits, but also you need to be careful about when it's only apply it when it's working from home. You do have some eligibility to avoid autonomous tax aggravation in case of ending the year with a loss. But again, look at the conditions. Data consistency, as we just mentioned, make sure that you file everything, because more and more there is communication according to different organizations of the state. The productivity bonus associated with the salary planning, you need to make sure that for you to have the exemptions on the bonuses, you need to make sure that you also increase the salaries. Changes as well regarding company cars, so the reduced autonomous taxes with the emissions, the new protocol of emissions, the postponing of some rulings regarding invoicing and the SAFT files, and then, as we just saw, the reduced corporate income tax for Madeira and Azores. So this is it for this first part. So I would now gladly start taking some questions. So make sure, if you do have any questions, to write them down in the Q&A section that you should see on the right of the screen, with an icon with a little question mark on it. So I guess let's start with one that has the highest votes, and from Lily Anna, which is there any risk that these bonuses could later be reclassified as regular income during an audit? Wow. Yes, very good question. So There's always some risk. I mean, notably the tax authorities, notably and unfortunately, the tax authorities in Portugal sometimes have less than clear, but I would say that bonuses are, well, bonuses, right? They are, so it's less about your question, right? Bonuses will not be classified as regular income unless you're paying them, well, regularly, right? If you pay every employee 100 euros or 50, whatever may be, right? But always the same amount every month, then it could be tricky, right? Because a bonus in theory is variable compensation associated with the achievement of certain goals, right? So even if it's monthly, and if it's monthly, you don't really have any tax advantages because it does pay income tax and it pays social security, but it does not constitute regular income if it's changing, right? Because you should have metrics, you should have the ability during an audit to prove any auditor that, oh, look, no, this bonus was paid based on the achievement of these metrics, and you can even see that month to month the value changes. So that's, it does not get classified as regular income. However, I think the intention with the question is, can it be then forced to pay the exemptions, namely social security, that you had on them? And well, again, it depends on, you need to really make sure that you do things the right way. We have at Regine have had a lot of these discussions, a safe and there's also tax experts with different interpretations. The safe way, generally speaking, is if a bonus is unregular, it is not predictable, and it is not paid often, it can be exempt from Social Security. Now, unpredictable and not recurrent means that you don't pay it every month. It also means that you don't pay it every quarter. It also probably means that most likely you should not pay it every year. Because arguably, if you pay it every year a bonus, that is recurrent and predictable, right? So devil is in the details. Sorry if I don't have a super clear answer. You really need to go to the details. Basically, you need to get good advice from a tax specialist, well, Bridging or any other company out there. Now, let's move to the next one from Mike Ross. So, from a tax corporate perspective, is Portugal becoming more competitive compared to other EU countries? I would say yes. I would say yes. I think it's potentially even quite surprising because if you are based out of Portugal, you'll often hear that we have way too much taxes and the government is, bloated and spending too much of taxpayers' money. But interesting enough, at the company level, we have now become very competitive, right? I won't say necessarily the same regarding personal income tax on the personal level, but definitely yes for company level. Okay, so next one I have from Armindo Lavrador. From a practical standpoint, do you expect the gradual reduction of the corporate income tax, or IRC, to 70% by 2028 to influence where companies choose to invest? Great question. Really depends on what you're looking to do, right? We at Regine, we work a lot with foreign companies, like 95% actually of our revenue is sales to outside of Portugal. And usually Portugal is seen as, a satellite office, where they have a team, either because, they want to tap into the talent pool. Let's face it, some of these companies come from countries where the cost of salaries are higher, like, Nordics, UK, Ireland, or the United States. And so there is that. But what that means is that the structure they have in an international environment means that they have, a holding structure, maybe in the UK, maybe in the United States, where they essentially invoice their customers, right? And what that means as well is that most of the profit under the local company is basically just invoicing the parent company so that they then pay the salaries, right? You do need to have a transfer pricing and you do need to have fair, but what I'm trying to say here is, you don't leave a lot of taxable profit. So does it make a huge change for those particular cases? Maybe not, but it is, yes, a good measure. So I think it will influentiate positively. I think it's hard to tell how much, because associated with be very tax competitive comes a couple of other things, right? Which is it doesn't matter if you're very tax competitive, but then it's super hard to do business in the country. Thankfully, there's a lot of things that Portugal has been doing better now, which is a lot of the processes have become more digitized. And I should say quickly this, that we at Bridging, we operate in Portugal, Spain, and Italy. And comparing these three countries, by far, Portugal is the one that is farther ahead in terms of the digitization of government and a lot of acts that you need to do. And that might be just as important as a competitive tax bracket, the easiness of doing business in a country. I'm not saying it's perfect, far from it, but there has been definitely progressive steps towards it. So it should be positive. How much? I guess we'll be here to see. Okay, so next question from Beth Jackson. How strict is the requirement to link telework compensation to actual expenses like electricity or internet? So that's a good one. So we saw this policy change quite a bit. Early on, it was really weird, the application, really hard, even harder to manage, because what the government says is, okay, if a worker, usually, let's say, paid 40 euros of electricity, and now that they are working from home because we were on the pandemic lockdowns, they are paying 50 euros, there's a 10 euros delta, and the company should compensate for that. Now, in reality, we all know, like during lockdown, it was us, it was potentially a family, kids, and they are all using more electricity, right? So is the 10 euros delta just for the work that is being done for that specific company? Really hard to tell. So that part of the law was changed, and now we have a fixed amount because it was virtually impossible to measure any other way. So it is not, when you ask to actual expenses, well, no, they have a daily limit, period, right? So you could spend less, you could spend more, but that's the amount per day that the companies can pay employees. So next, again from Mike. So for companies that already provide a flat remote work allowance, do they need to restructure it to fit within these daily limits? Well, depends. So if you want to have the exemption on taxation, yes. But what we often see, like I tried to mention earlier, is some companies don't want to spend, time to managing. Oh, is the worker working from home? Is it working from the office? That is he using any a mouse or a keyboard that is purchased at the personal level? So like the time and cost just to manage all of that might be way more than the benefit that is giving in terms of a lower taxation, right? And so do you want, let's imagine that, I don't know, the hourly cost of the HR admin that needs to do all of these calculations is, just for the sake of it, 20 euros, right? We just saw that on a regular case, you would be potentially saving 2.5 euros on taxes, right? So do you want to spend 20 euros to save 2.5? Right? So what we see a lot of companies is they actually have a remote work allowance that is superior to what you can get by that measure from the government, and they don't do the math. They just pay everything, and they pay above to compensate what the employee gets in taxes, simply to avoid the effort of needing to micromanage when people are, from where people are working and what tools they are using for work. So really depends on what you want to do. We see a lot of companies. It is positive that the government provides the exemptions, but the trouble to manage this seems potentially not worth the trouble, to be quite honest. Right, next one. Is the meal allowance still one of the most efficient benefits for companies in 2026 from a tax point of view? Easy one, yes. So fully exempt from taxation, very well established, very known. Most people working out of Portugal will have received it. So it's something that has common, existed, exempt, no interpretations, no, oh, will it be reclassified? So very clear. And yes, the meal allowance is one of the most efficient ways to have some tax advantages, for sure. Okay, so moving on, also from Layla, what would be the other most important benefits for company this year besides the meal allowance? Right. So we actually, for on the companies we work with, we really put a lot of effort in this. We always try to help them have a worker compensation structure that greatly optimizes for tax. Now, Note that optimize for tax means using what is on the tax code so that you can provide benefits to your employees and keep obviously compliant with the law. Examples of that are, for instance, paying for childcare, kindergartens, right? The company can issue vouchers or payments specifically similar to the meal allowance. You need to have a platform, and we use one where you put money that the employee can then use to pay for education or even the preschool kindergarten. Now, there's different taxations. The kindergarten is fully exempt from taxation, similar to the meal allowance, but the education, think like on school years on a private school, it is exempt from Social Security, but not personal income tax. Still, it is better than paying on salary and then having the worker needing to pay for the same expense and have paid Social Security on top of it as well. There are other benefits around healthcare. And note, this is not private health insurance. That is more and more common. I just saw a statistic that over, I believe, 50% of workers now have a private health insurance. But even when you do have a private health insurance, you usually need to make some co-payment, right? You still need to pay something. Actually, if your company has one of these programs, you can deduct that payment from that sort of amount, and that's a valid expense, right? So what we see typically is for companies to provide a sort of a flex benefit allowance that can then be used based on individual needs for a lot of these categories. Again, some of this is fully exempt from taxation, others are not. It really needs to go down to a very good and clear interpretation of the tax code. Just to put this in opposition to other things, it does happen. Some companies, and I would say, unfortunately, some companies that operate in an outsourcing model, that they find other ways to provide liquidity. Again, there was a news very recently that because of the still fairly high taxes on the personal income side, there is a lot of companies that pay their employees under the table. That is obviously a tax evasion, and tax evasion, it is a crime. So you should not do that because you do risk to potentially jail time, huge fines, and actually be prevented to operate in certain areas. Let's say that you have a dream to opening a bank. If you do tax evasion and you are convicted, absolutely not, right? So please don't do that. Please use a company that can help you prepare a good compensation that is fully compliant with the law. Okay, next one from Evelyn Taylor. Do I understand correctly? Is corporate income tax, or IRC, going to be 70% in 2028? Yes, assuming government does not fall again and we don't go into elections and someone comes up and changes it. That is the plan, and that will happen under the current mandate of the current government. So unless anything serious come, that will be a fact. Next one, also from Evelyn, just to clarify, if we don't meet the 4.6% increase threshold, we lose both the tax deduction and the Social Security exemption on the bonuses, correct? Yes. So that's why you really need to look at your policy, your strategy regarding, if you as an employee, you are able to provide some raises to your staff. Do take a look at the conditions here, because you could be also benefiting somewhat, giving, obviously the raises to your employees, but also benefiting from these deductions. But yes, they need to be at least 4.6%. Note, on average, right? And below average employees need to have 4.6. But you can have some people on the organization, higher salaries, that don't necessarily need to have 4.6 on average, however you do. Okay, so next one, from Clarissa, would you say overall these new incentives are more business friendly comparing to last year or previous years? I would say yes. There's definitely lower taxes for businesses. Obviously, most businesses like that, but a lot of the things here do tend to align incentives to enable businesses also to get a little bit higher salaries or deduct more stuff. So yes, they don't seem at all less business friendly. How effective they are, always debatable, but as long as they are trending in the right direction, it is positive. Next one from Beth Jackson. We are based in the US and plan to expand to Portugal. Great, you should. What kind of local company should we engage with? We've talked to some accountants and some law firms. Oh, that's a great question. So, um, obviously, accounting and law is pretty, I guess, old professions, right? And there's plenty of providers out there. I think from watching today's webinar, you probably realize that it's really important that you can get one that really pays attention and really supports you. What we see a lot in the market, and you coming from the US, a market that actually I have a lot of experience with, and we have a lot of customers in, um, the tax code and the employment, you talk lawyers, right? So even the work contracts and the employment liability, it is tremendously different. So you really need to get good advice. Not only that, you should get advice from companies that know how to explain things in English, right? That they can translate to things that potentially are easier for you to understand. Because if you do not do that, you can have a lot of liability. That's actually where bridging specializes, as I mentioned before. Uh, all of our customers are international. 95% of our revenue comes from international countries, so support of those international companies. And we actually combine in-house lawyers, certified lawyers, with in-house certified accountants, so that we really provide that comprehensive support for businesses. So, drop us a line. We'll be happy to talk to you. Next question from Paul. For startup company that's growing quickly, is it more cost effective to focus on salary increase or offer more employee benefits? Okay, so I think there's a balance, right? It's not one or the other, it's potentially both. I do think that you do want to plan accordingly and try to maximize on employee benefits, but they're also only effective until certain point. So the meal allowance has a limit that is exempt from taxation, right? So you should absolutely try to maximize that. But once you do, like, you can't really do more because everything else will be taxed. So no more benefit from a taxation perspective, that is. Then you have what I mentioned, there's some additional things, what I called as flex benefits, that you can have an amount that is used by employees, that has different tax treatment and all of that. But then again, it kind of gets into a limit. It really also depends on the individual circumstances of your workers. If you have an employee that has, a family, some kids, they need to pay for school, that can be a huge amount of money. And so a huge opportunity to have very significant benefits or flex benefits that it is then used by the worker to pay for the school of those child. Now, if you have a worker that does not have children, like, the possibility of offering those benefits is much reduced. You do still have things like the pension schemes, called in Portugal PPR. But then again, it depends on the individual circumstances. Does your worker care about that? I would argue they should, but let's face it, people are different, right? So some people do not care about saving for retirement. So you should, I believe, maximize benefits, because it's both better for the employee and actually the employer. But they are only effective until a certain point. Then, the only way to improve it would be to base salary increase. Okay, we have 5 more minutes, but I guess at least for now we only have 2 questions. So great for timing. From Jacinto, which of these measures do you think companies are most likely to overlook but shouldn't? I'm thinking maybe the salary increases, right, and the bonuses, because there's a lot of details, right? And if you don't do things right, you miss them. And look, some businesses are struggling. We know macroeconomics are, again, very uncertain. You might not be able to provide salary increases to your staff. But if you can, if you're willing to, and if it makes financial sense to do so, and let's say that you're budgeting for 4% increase, maybe you could push that just a little bit to 4.6, and then you get the benefits, and net result, you are better off. So it requires planning. And I'll say that I don't think the Portuguese are known by having be great at planning, but you really need to, right? And this is something that you need to do before, right? You need to plan for the year. You need to understand what you can do, because if you increase anyone just in December, like, the amount is almost irrelevant, right? The benefit is kind of irrelevant. Some other things, like the tax treatment of certain expenses, is something that you need to understand them, but they come into effect when you do the year's end accounting, right? So it's slightly different in terms of timing. Okay, last one from Alex Davids. By the way, thanks everyone for the questions. Hopefully this was insightful for you. Last one. We have worked with global payroll providers in the past, but the experience hasn't always been good. Are global providers a good solution, a good option for Portugal? Very good question. So there is definitely a big trend in the market to having global providers. So companies, some of them also do, or are, sometimes known as also as employer of record. We are all actually Bridging. We also do that. Employer of record is slightly different, because yes, you do the payroll, but you actually also are the de facto employer of the person. A global provider, usually you are the de facto employer, but they help you with the payroll. So you can see why a global UR does offer global payroll. The problem with using them is the same exact problem with using them also for UR. They lose on the local specificity. Now, it is very convenient if you have a global workforce that you can employ people throughout using a single provider, but like, great majority of the times you are losing on all these taxations. Furthermore, I would even say something else, which is, in Portugal, we have on the individual level a regime for anyone that is coming into the country called IFICI, and a global provider, not only if they are doing employer of record service for you, they cannot provide that for you because they don't have the local certifications to do that. And what we have also seen with global providers is that because they are not optimized for the local changes in taxes, they do not advise you. They don't help you build optimized compensation structures, because simply they don't know them, right? Imagine what it is to be an expert in 200 plus countries. Very hard, right? So that's why I do believe there is great benefit in using a local partner that has payroll experts, accountants, and lawyers in country, not a shared services with someone in, a random company doing payroll for you, someone that is on the country where you have employees. That is one of the greatest advantages of Bridging. So hopefully that also nudges you to potentially get in touch with our team. Now, just quickly before we go, and I guess I missed this one, where you can find us. You can, scan the QR code, and you should be able to book a call. And you have obviously our website, that's bridgein.pt. You can also email us at hello@bridgein.pt. Find us on LinkedIn, Bridgein with the space, and even on Instagram, bridgein_com. Thank you so much for joining today. Hopefully this was helpful for you. We'll continue to have webinars like this year and the next, because they are usually a great success. Hopefully you find that as well. Thanks so much for joining again. And this is it for now. Thank you so much.